All right, good evening. Let's do a quick audio check. Let me know if everything is fine. Awesome. So I'm gonna give this like a minute or two, and then we're gonna break things down. We're gonna be taking a look at the Forex Factory, FatWatch CME Group. We're gonna talk about the importance of FOMC this week, trade setups that I have in mind for Bitcoin. And alongside that, we're gonna be doing a bit of an educational thing on VWAP, market profile, and stuff like that. Of course, there will be a Q&A as well. So let's give it a minute to make sure that everybody is joining up, and then we're kicking it off. So how was the weekend? Did you guys do anything fun? We've got Cepheus. What's up, man? Nabula, good to see you, buddy. Imran with us as well. Michael, KB, hey man. Morris, the Goldfinchy, good morning, good morning. Let's give it a minute, and then we can see what we have within the markets. Bit tired today. I don't know why. I haven't slept that well. Oh my gosh. But we gotta go at it. Yo, Riffle, what's up, man? Good to see you. Uzi, good to see you, man. What's up, Sylvian? What up, man? Daniel's been trading shitcoins all weekend, bro. I mean, Pump has been doing so good. Like, Pump has definitely been the outperformer. Like, Pump. Let's quickly take a look here at the outperforming assets. I mean, DeFi. Let's open up DeFi here. It's number 7. All right. I mean, look at this. Pump, Hype. Like, these are the pairs that you want to take a look at. Memes, however, are taking a beating. DeFi as well, still the strongest indices here. Then we've got L2 actually on top. L2 is on top 5. All right. Oh, look at this. Bitcoin weakness. And we got Pump, Sky, and Maker. But especially this pair, bro. This is just going absolutely insane. Thank you, Enos. Appreciate that, man. If you have any questions, feel free to fire them. I mean, I'm here either way. Pimp for time. I mean, yeah, bro. Those were the better days, right? Back in the day. Holy shit. You just woke up. Holy shit, bro. Like, it's 8 p.m. my time. All right, that's good. That's enough. Safe. VWAP layout, BTC. No, I want to have my main layout here. Main. Like that. All right. So first things first, what is up, everybody? Hope y'all doing well. Welcome back to another live stream. Within today's live stream, we're going to be going over the important date that we have on FOMC. We've got, that's definitely going to be a market driver this week. It's going to be a make it or break it, and it is accompanied with some very important levels on VWAP and TPO. We're going to be using, obviously, VWAP and TPO to define a bias going into next week. I'll be talking about why I think longs are still a good play and what the invalidation for that is, and where I think, bears are totally screwed and we're going to go way higher. So it's going to be a good session today. Stick throughout the end and you'll know exactly what you need to know in terms of trading. Now, obviously, these streams are sponsored by Bybit. Now, if you do want to support me, you can do so by signing up on the link below. It helps me grow the channel, helps me support the stream. So, that's just at the description. So without further ado, let's take a look at the prep. We're going to start off here. Today, it is the 14th already. The tick size that I'm going to be using on TPO remains 65 for me. And that brings me straight towards the impactful news events. Now, if we take a look here at the calendar Forex Factory, we can see that Tuesday we've got core retail sales. This is going to be important because, we basically want to see weak numbers which kind of gives a dovish tilt, where we see that the Fed might see that the demand is cooling off. Now, strong numbers, that would be pretty bad, and I think we could see some downside. So, market movement events are going to be starting off from Tuesday, and then we've got the big boy, which is Wednesday. We've got FOMC. Now, FOMC day, I mean, if we go towards the Fed Watch tool here, we can basically see that the market, we have a 96% that the market is basically expecting a 25 BPS cut. Basically, the Dots and Powell's town will decide the market, because the market is fully pricing in a 25 base point cut, right? So anything less dovish, like no cut or a hawkish projection, like that will be a shock for the markets. Now, since this cut is basically a given, the reaction will mainly hinge on the tone that Powell will have within the press conference, right? Later on, that's going to be very important, and the dot plots. Now, a base case would be, for example, a 25 base point cut with a neutral guidance in the presser, already priced in, right? The market reaction would probably be muted, where we just see a nice whipsaw on Bitcoin, and then, we get like continuation of that range, unless we get like dots that signal fewer cuts ahead. Now, a dovish surprise, so this is basically what we want to see for more upside, would be a 25 base point cut, and then Powell with a hint of more aggressive cuts heading into 2025. Now, that would obviously mean equities, Bitcoin going up, and the dollar has a weakness. And then the last part would be a really hawkish surprise, will be 25 base point cut, but the dots will show slower or limited future easing, and that will really cause, I mean, at that point, we'll have to see whether or not this is going to be holding a support, because, that would be really bearish. So those two are the main drivers for the week. I mean, we do have unemployment claims on Thursday as well, but I think the big boy is going to be the FOMC here, where we want to see, we've got this already priced in. So it's going to be dependent on the dot plots and what Powell has to say in that presser later on. So around 6:30 p.m. UTC, that's going to be very important. So that's done. Now let's take a look at TPO, because there is definitely some interesting developments here. In terms of TPO, I think for those of you who are new to my channel know that, or for those of you who are with me for a longer time, know that this is a daily frame, this is a weekly, this is a monthly time frame, and then this is the similar day. But in this case, look, I'm merging profiles, and the reason why I'm doing that is because if I'm merging profiles, I lose sight of what the individual profiles look like. For example, this 2-day composite looks like this on that chart, right? That is why I think it is very important to have a layout like this that will give you the most information. So there's that. We have formed a 2-day composite. Why is that? Because if we take a look at this, we can see that we have a 50% value overlap with the previous day, meaning we can add that within the previous day to form a 2-day composite. Now, with this day right here, if today closes within value, we can add that within the composite as well, which gives us a 3-day composite. Bro, what you said is not to merge weekend profile. I mean, no, I didn't say that. I said this is a Friday, right? If it's only going to be a Saturday and a Sunday, then I'm not going to be utilizing that as a singular composite. However, this is Friday, right? So it's not only a distribution that is formed during the weekend. So there's a big difference in that. So definitely a valid composite for now. And you know what? Look, let's expand this profile, and it clearly shows you, right? It shows us that this is a good composite. By look at the picture perfect reactions of that 2-day composite, value high and the value low, right? So that's basically the confirmation that we need to see in order to know that we are on the right side of the track here. So 2-day composite, we've got a naked point control there. We've got a naked point control here. We've got a single print gap there. So there's definitely a bunch of anomalies here. And one thing that Bitcoin tends to do is that whenever it starts to trade at key resistance, it tends to form like a 3-day, 4-day, 5-day composite, spikes the high, then gets back within value, and then flushes lower to take out some of these anomalies. That obviously that's lower time frame bearish, right? Higher time frame, I remain bullish, but this is definitely a scenario heading into next week where I'm like, well, if we do form a 4-day or a 5-day composite here, we try to break away from value, take out some anomalies above us, and then reclaim the composite. That's a proper short towards the naked point control there and there. Now, I don't want to get ahead of myself, but if we're taking a look here at the weekly, let's zoom in. This chart is a 5-week composite. Now this is, if I undo this real quick, undo all merges within this profile, you can see that we had 1, 2, 3, 4, 5 weeks of overlapping value. If we merge all of those 5 weeks together, we're getting a 5-week composite that looks like this. And then the value area low is here. So it is no surprise, or it should be no surprise, that Bitcoin is stalling at the 5-week value area low, because this is basically going to be the bearish line in the sand that we have going into next week. Acceptance back within the composite, and we're going to be targeting the point of control and potentially the value area high. But until then, huge resistance, okay? We need to be aware of that. Another thing here that I want to point out is that in the previous streams, we were mentioning this 2-month composite, right? And it was no surprise that we were getting multiple rejections. We also stated that when there's finally a drive back within the composite, we should be going with that break from value, right? Or in this case, a break back within value, because, you know, everybody's conditioned to short this level until we accept back within. And then all of those stubborn shorts continue to short up here. And that is actually what's propelling prices higher, right? So you do not want to be on that side of the trade. In my opinion, Bitcoin on a high time frame perspective, purely based on TPO, is bullish as long as it maintains 112K as support. So we could even do this, and that would line up with the single print here, right? Right here. Look, this single print right there, confluent with an older composite value high, is confluent with that monthly value area low. So even if we were to do this and then trade higher, right, this would still be a good buying opportunity. So let's break that all down and summarize it briefly within the prep. Otherwise, we can't really track it, right? So we have formed a 2-day composite value area, which we are rotational within. We reject it at the 5-week value area low at 116,350. This will be our bearish line in the sand. We have acceptance back within 2-month value. 2-month value low will be our bullish line in the sand. Straightforward, right? Then we have a naked point of control at, the first one is at 115,765, and the second one is at 114,010. And then finally we have got the single prints below, confluent with the 2-month value area low. Now that 2-month value area low, back within 2-month value area low at 112,650 will be our bullish line in the sand. Essentially what we've just covered is that, yes, we are aware of the 2-day composite here. Beautiful intraday rotations for those of you who are trading on a Sunday. I'm personally always spending time with the family. However, the most important takeaway here is that the bearish line in the sand is around 116,350. That is based off the 5-week value area low. And then we've got a bullish line in the sand, which is around 112,650. And that is based on the 2-month value area low. Now there's some level of confluence here with these two price points, and we're going to be talking about that right now. Now, moving here, VWAP, we've got the yearly. In this case, we've got the yearly time frame, we've got the quarterly time frame, we've got the monthly time frame, and then we have the weekly time frame here as well. On the yearly, I think this is actually pretty telling, where, you know, right here, the sentiment was pretty similar, where everybody was really bearish. Unfortunately, I wanted to get long for a longer term rotation below these lows into the previous quarterly value high. I didn't get into that trade, which is a shame, but it's still good to see that based on context, right, this was still a good rotation from the developing value. We have even traded back above the previous year standard deviation tree from 2024, right, which is the previous year, obviously, which has been capping upside here. It was then a pivotal price point there, and now we're trading back above. Do I think for Bitcoin to be bullish that we should be retesting this before continuation higher? No, I do not think so. I think if we actually do revisit 112, that would actually be bearish, because when everybody's watching the same price point, right? This is a structural price point, right? Right there. Everybody can see that this is resistance turned into support. Oftentimes with Bitcoin, if it flushes below that structure or towards it, this is not going to be holding, right? So I would prefer to have a shallow consolidation, immediate upside, right? That would have my preference, which brings me towards the quarterly. Now, previous quarterly values are one of the most important values, in my opinion, that we can use within trading, because the yearly is super important, but the quarterly is more frequent and it is not as short as the monthly. So the quarterly for me is a sweet spot in terms of defining where I want to get in and out of my spot allocations. If we're taking a look at this developing quarterly value, it will become a new previous quarterly value within 2 weeks. That means this is higher time frame resistance and this is higher time frame support. If we trade up here during the quarterly close, that previous quarterly VWAP will become super important as well, in terms of if we're trading above, it's support. If we're trading below, it's resistance. All right. Until then, it is good to take note of that Bitcoin is trying to accept above that developing quarterly VWAP. So even if we were to get some downside, I need to see an H12 close above to confirm to me that, okay, they are defending quarterly VWAP. And then, you know, if we're taking a look at the monthly right now, because take note, the monthly VWAP here is actually, let me get rid of the 30-day and the rolling VWAPs for a sec. The monthly VWAP is actually confluent with the developing quarterly VWAP. And then we've got the developing month value high here. So for me to become bullish, I mean, this is a pretty bad structure, right? I do not see an intermediate trade here. I can't really tell whether or not we're going to go up or down. But based on the current structures, I know that this needs to hold as resistance, which is the 5-week value area low. And that this roughly, or all the way down towards 112, right, needs to hold a support, which is the 2-month value area low. But as I've stated before, I don't think that we should be going this low. I think I would allow for a retest of the developing month value area high for longs towards previous month value area high, right? That will be okay, but acceptance back within developing value, and I think we're going to go, you know, way lower. So that's something to keep in mind. Then we have the weekly. Now, obviously, the weekly is good for intraday or, you know, intraday trades and, you know, for trend continuation, because we can clearly see that the developing week value high has been capping downside ever since this uptrend. If we're getting a shift back within, then this becomes the range, right? From previous week value high tomorrow towards previous week VWAP. So that's the price points that we will be trading. Now, that's a whole lot of chit chat, but we can simplify that. And let's write that down. So we have failed to break below developing year value area high, developing value area high, and we reclaimed the previous year standard deviation tree. We are also consolidating above developing quarter VWAP, which is confluent with previous month VWAP, right? So short-term bullish line in the sand. Developing week value high remains dynamic support and resistance. Going towards the 30-day rolling VWAP, let me finish this up briefly and then I'll do some questions. So going towards the 30-day rolling VWAP, in the previous stream, I was discussing a potential fractal, right? Where it was here, where we had the rejection at the 30-day rolling VWAP followed by an immediate rejection lower, right? Then we closed and that was a trigger to become super bearish. In this case, we've got a close. Yeah, sure. However, we did get absolutely zero rejection. Instead, we tried to break below. Buyer stepped in here. Let me show you. Buyer stepped in at the 90-day and then we got continuation higher. So if anything, this is looking bullish to me as long as the 90-day rolling VWAP holds the support. Similar to the previous interactions, I think a lot of people will be shorting into that level once we finally retest it, where I think For example, here as an example with the 30-day, right? When we finally break above the 30-day, the first interaction is always going to be the best one, right? That's the one that you want to be logging, not the second, not the third, the first, the first one. But ironically, a lot of people will be shorting this, right, into that support, and that will propel prices higher again. So I think the more time we spend up here, the better, because at that point, the 90-day will slowly start to creep upwards again. At which we can start looking for longs here. So let's quickly go over some of the questions before we go towards the actual trades that I'm looking at. The VWAP that I'm using, right? I cannot share the settings because it is not. It's a custom made indicator just for me, or for the users within my Discord. So I can share the settings, but you don't have the view. You don't have the indicator, right? So that won't help you. I will not really look for longs around 112 because I think I think by the time that we get there, it truly depends on what I'm seeing. If I'm seeing the usual that I want to see in terms of longs, like high volume bars, absorption, aggressive shorts entering the market, an increase in open interest, for example, all of those, then yeah, I might take a step. But in my opinion, we should hold it. And I wanted to show you guys that as well, because if rolling VWAP, by the way, let me just fine tune this, otherwise I forget it. 30-day and 90-day rolling VWAP cross. This will be our bullish line in the sand. So let me break it down for you guys on why I think we should not go all the way down there, right? The 30-day, I mean. So the H4 here. Let's get rid of these. The H4, like that. On Bitcoin, let's get the drawings in as well, like that. So what I would like to see here is this consolidation. Do you guys see this first H4 down close candle? Then we got a displacement higher. We're now forming a low. If we can sweep that into H4 demand and then reclaim the previous month VWAP, it's a good long in my opinion. Now let me take you towards some examples here. First example, we got a large impulse move lower. We finally break structure and we get a first down close candle after we go up, right? We get the displacement higher, consolidation, then we finally retest it. This becomes support before the next bigger move upwards, right? This is number one. Now there are more. Let me find them. So right here, big displacement higher, H4 down close candle. Every attempt is getting bought back up, right? Then we get the expansion higher. Same story here. We're getting large displacement lower, push above, H4 down close candle, right? Once we start trading above these highs, the previous high that led to the sharp move lower, every push back into H4 demand is getting bought back up. Now, if we take that into account and we look at this, and actually the 90-day rolling VWAP here is already crossing the H4 demand here. So what I would like to see here is, let's get rid of the 30-day real quick. If Bitcoin is bullish, I would like to see this hold a support. And then confirmation would be a reclaim of that previous month VWAP. Because if we fail to do so and we trade below the 2-month value area low, then oof, I think we're truly done. And we might see a nice rejection and a flush towards the lows. All right? Does it make sense? The monthly point of control, 117K, has definitely my interest because that's the... Do you remember what I said at the beginning of the stream, where if we form a multiple day composite here, and then whoops, and then we sweep the highs and reject, that's a shorting opportunity. But I'll go over all of the trades in a bit. Trying to cross. All right, see you later, bro. Like, I wouldn't give two shits. See you later. Why you never use volume profile for day trades? Well, I use volume, but it's based on VWAP, right? So volume profile, and the reason why I'm preferring time-based is because a time-based calculation works better to form a composite. And that is why. So I prefer a time-based calculation for value areas, and that's where I base intraday trades off. Let me see if I can block this bitch ass. Where are you at? See you later. Piece of shit. Talking shit. All right. Sorry for that. Our rolling VWAP just for higher time for direction, but for support and resistance, we better seek for suggestion. For TPOs. I mean, rolling VWAPs for me are, you need to know when you actually want to look for them. So for me, it's gonna be, I use them to define the actual trend. So rolling VWAPs are really clean if you want to look for trend, right? However, once we start to trade within a bracketing environment, for example, when we form a higher time frame range, then the rolling VWAPs lose their significance. And then at that point, I'm starting to put more emphasis on the monthly values and so on. So that's mainly the difference between them. So I use them in Confluence when we're trending, for example, right? But once we start losing trend and we start to form a bracketing environment, I want to put more emphasis on static levels. In example, the monthly value area low, quarterly value area high, and so on. Okay, so let me go for here. The summary here. I know Vtrex, don't worry about it, bro. But you know, there's just no room for negative energy here. So if someone wants to talk shit, you know, you could talk shit, but talk shit to your wife, right? Not to me. So while Bitcoin is bullish on the higher time frame based on the monthly composite and filled break below the developing year value high, we need to be mindful of the overhead resistance we just ran into, which is the 5-week value area low from the prior all-time high. Heading into FOMC next week, this will definitely be the make it or break it pivot for Bitcoin, as acceptance above indicates not only acceptance within the weekly composite, but also acceptance above previous month VWAP, and I can type and developing quarter VWAP, at which I will target 118,700 next. The bearish case would be a clean break below the 2-month value area low, at which another attempt at the lows seems likely. So yeah, there's definitely confluence, bro. So in this case, right, basically what I've just said is the bearish line in the sand, we've just defined that, right? It's the 5-week value area low. Now, why is this so significant? Well, if we trade above 116,350, that would also mean that we're trading above, that we have found acceptance above the developing quarterly value high. That's bullish. And that we have found acceptance above the previous month VWAP, which is bullish, at which we can target the value high there. Okay. All right. So moving forward, we've pivoted towards that. So what is my actual narrative heading into next week? Well, whenever Bitcoin trends, it trends hard, right? I think we can all agree, myself included, sometimes you don't get into a trade and it just continues to trend, right? It continues to trade higher and you're like, holy shit, bro, let me in. I need to get into a trade. Which is why when there's a lot of FOMO or when a lot of people are getting offside, everybody is jumping in on the first pullback. That is why we're not getting the picture perfect break or, you know, retest of this structure, for example, where we go all the way down here and then continuation high, right? When that occurs, I think we're actually going to go lower, right? So that is why I tweeted several times last week, shallow pullbacks, continuation higher, shallow pullback, continuation high, right? Because everybody's just jumping in on you know, on the first string failure pattern, thinking, okay, this is it, right? That's why we're getting those. So whenever Bitcoin trends, it trends hard, and it does not give the picture perfect pullbacks, which means even if we revisit the 2-month value low, it is not the best trade to expect it to become support, as everyone is watching that same level, right? we don't want to be on the same page as everybody else. We need to be, you know, defining, okay, is this actually a good trade? Like, is majority of the people, are they wrong here or are they right, right? Is everybody's watching the same price point? Instead, for bullish continuation, I would prefer the current H4 demand to hold as support, followed by a reclaim of the previous month VWAP for longs towards the previous month value area high, which is confluent with developing quarter value area high. Losing the previous month VWAP as support would be weak. That is why I'm gonna allow for an H12 close. Now I saw someone asking about, I think Daniel was asking why an H12 close. I know it's a hard time frame, but why not a daily? Because that's mainly personal preference, but for me it's a daily takes a bit too long, and an H4 is just a bit too low time frame. So H12 for me is a sweet spot for that. So we could do, for example, this. Let's say they're heading into FOMC. We get something like that, and then an H12 close, or we get a strong close above the previous month VWAP, right? That will be an indication for me that, okay, we're running it back up towards the highs. So yeah, that's definitely something that I'm looking at. For example, an example of that H12 close was here, right? We took out this low, and then I didn't really want to wait for a daily, so I waited for this H12 close to get into a trade. So for me, it's always going to be an H12 for a confirmation on the higher time frame, not necessarily a daily, right? Your message got banned by YouTube. What did you say? Were you asking for fee picks again, bro? I mean, if that's the case, then yeah, I think so. A support will be weak. Now that brings me towards the hypos. The first hypo, considering that we're gonna be basing our trades around the 5-week value low and the 9-day rolling VWAP confluent with this H4 support, right? We're gonna be basing off these price points. You know, a couple of trades to keep in mind. The first one is gonna be, I'm not gonna be writing the trades out, I'm gonna be showing you it. So in this case, if we were to form a, let's say a 5-day composite, the value area high and value area look like that, right? Within that range. Then we slowly trade higher. We got the 25 BPS cut. Everybody's like, okay, boom, we're going to go higher. And then Powell comes out of the gate. The dot plots are bad. And he has like a hawkish stance that he says, well, future cuts are going to be data dependent, blah, blah, blah. I do not have enough knowledge to really trade what he's actually saying on the actual spot. But what I do know in terms of structure, this would be typical, right? Where we fade the highs here. We take out all of the highs, get back below the 5-week value low, and that brings up a potential short for a move back into the 9-day rolling VWAP. That's trade number one. Trade number two would be clean smash above, consolidation here, where we form time and space, right? At least half a circle on the 30-minute time frame before retest. And then we see a large amount of sellers piling in at the lows. Maybe for me, it's going to be a high volume bar. But if you're, for example, trading order flow or, you know, just regular price action structure where we do something like that, market structure break, right? You want to long that breaker, then yeah, that's definitely your go-to execution for a move towards previous month value high. Conversely, those are the trades around the 5-week value low. Now, if we're going to be looking for longs, then I think this is going to be the area where I'm like, that needs to hold. Similar to what we just discussed with the previous H4 demands, right? I think if Bitcoin is bullish, 9-day rolling VWAP, H4 demand, like this is the make it or break it for me. I do not want to see a retest of the 2-month value low, right? Too many people are waiting for that in my opinion. So if we get this, very risky, right? This is definitely stepping in front of a train once we start breaking lower. However, if you want to wait for a bit more of a conservative trade, you can wait for the market to show you that it's trading back above equal lows, for example, or at least closing back above the previous month VWAP, because that's an indication that 1, we're coming off the 9-day rolling VWAP, 2, we're finding support at H4 demand, and number 3, the most important one, we've got a recent shifted condition there. So that means that we have a failed break below the monthly, and we can now start to look for longs. Simply put, if you're a price action trader, right, you can either set limits here at the H for the month, for example, around the 9-day rolling VWAP. And if you want to wait for a bit more of a conservative entry, you wait for that sweep. This sweep will form, I don't know, 4-hour down close candle, hourly down close candle, whatever it is. Next candle will be an engulfing candle, breaks this previous high. At that point, limit orders there, invalidation is below the low, and we're targeting this flat high there, right? That's the simple terms. I will make you a mod. I will make you a mod for sure. All right, so there's that, yeah? Now, am I gonna be looking for shorts on a break below previous month VWAP? Would that be a good trade? In my opinion, nah, not really. Because once we start trading here, right, and I want to look for shorts there, I'm essentially shorting right into the 90-day rolling VWAP. So whilst I might miss on a better entry, if we do break back below the 2-month value low, the risk to reward isn't there for me. I would rather wait for here to form a range, then a failed break back within, right, or above to get short, and then I will be targeting these lows there. So that's essentially the plan. Now that brings me towards the line in the sand. Like, what's the bullish line in the sand? What's the bearish line in the sand? For me, a short-term bullish line in the sand is going to be the previous month, right? And then the longer-term bullish line in the sand is going to be the 9-day rolling VWAP. And then for the bearish line in the sand, I've got only one, and that's going to be the 5-week value area low. It's going to be changing. For example, let's say that we have acceptance below the previous month VWAP. In that case, long-term bearish line in the sand 5-week, short-term bearish line in the sand previous month VWAP, right? And that's going to be it. And that's a wrap for Bitcoin. Like, this is my play heading into next week. Important dates are going to be, let's go back to the Forex Factory here. We've got the retail sales on Tuesday and then FOMC on Wednesday. And those are going to be, you know, in my opinion, the news-driven events, especially the press conference that we have. So we need to be Powell basically being extremely dovish, or, you know, maybe we get like a surprise where we got a 50 BPS cut. Like, if we get a 50 cut, like, holy shit, that would be like, that would propel price way higher, but I don't think that we're getting it. Basically, this is going to be a nothing burger if it's going to be a 25. So that's a wrap for the prep for Bitcoin. If you made it this far, leave me a like, leave me a comment, right? And then I want to move towards some Q&A. Does anybody have any specific question? We've got some time left. Let me just catch up on the chat real quick as well. Just a question: the high and low line are the levels of the range support and resistance. Are you referring to this line, these two? I mean, you need to draw them further away from the ocean. That's why they keep disappearing, bro. This is just just a lower time frame range for me, where I'm like, okay, we've got the impulse move higher from this low there. So this is going to be range low, and that's going to be range high for me. And this basically helps me map out things like if we go from external liquidity reclaim towards internal liquidity, right? Or external liquidity towards internal liquidity. So just a swing point right there. So in terms of the execution process on the high volume bar, I will put it really simply put, right? You can look at order flow, you can look at price action, but essentially what I want to be aware of is if this is a candle, we've got a wick there, and we trade into support, I want to know, is there an anomaly within the wick? Not necessarily here at the middle, but is there some form of anomaly resting within that wick where there is an increase in open interest, right? There's an increase in a large amount of sell delta indicating new shorts are being opened, right? And when there's not necessarily continuation after the increase there, it means someone is absorbing it, right? With a passive bid. And then when we close above their entry point, that's an indication to me that, okay, this cluster right there is probably going to be support, because when we pull back towards that point, they will want to get out because they realize, well, you know, maybe I'm on the wrong end of the trade, and that's why this becomes support and we see price higher. Brings me towards why a bullish order block works, right? Because when we start to trade lower, we sweep a low, large displacement candle, right? Bearish candle, large amount. If I were to visualize this as a volume profile, it would look like that, right? Huge amount of volume here at the lows. When the second candle comes up and we trade back above the high, this does not become some magical candle that's like, oh, hello, I'm a bullish order block, right? You need to be buying me. No, the positioning within this candle is now support, not the candle itself, the positioning, right? Because of the mindset that when we go back, they want to get out around break even, which is why this becomes support and we see continuation higher, right? And then the opposite goes for when I'm looking for shorts. So it's not necessarily, I just want to see an increase in dump participants that are taking a bit of an extreme position at a extreme, right? When we're trading at a range low or a range high for that matter. Reset chart view. Yeah, Ethereum, we can quickly take a look at Ethereum for sure. So Ethereum, look, the most important takeaway here on ETH, let me quickly show you guys on ETH. ETH. So we've got the yearly, quarterly there, quarterly, monthly. We failed to break above monthly value. That's not good. But the most important takeaway here is that we've got a composite from the previous, if you anchor a VWAP, you can just look for an anchored VWAP. I think it will provide the same value from the start of the distribution, right? Or this range that we have. It has been trading super clean. Like we see right here, right? The highs and the lows, the highs and the lows. That is why I said on Twitter, when we were trading up here, as long as we trade above, this is going to be the destination. We've reached the destination. We tried to hold the support, but now we're trading back below. So I think if we want to be, or if you're looking for additional longs, this would be like a proper confirmation where once we start trading above 46, or where's the previous month? Yeah, once we start trading above previous month value high, like that, this becomes a bullish breaker. And at that point, I'm like, okay, we're going to go higher. But until then, this is probably going to be resistance. If we take a look at this chart, we have the previous month value high. We've got the 4-week value high. This is huge resistance right there. We just took out these highs. And the next level of support for me would be the developing quarterly value high there. So, that's confluent with range high. And again, I wouldn't want to see this getting all the way back towards there, because at that point, I think we're going to flush way lower, right? So for Ethereum to become super bullish, we basically need to see, right now we're sweeping this low, get a displacement back above this high, and then we can start to look for, this is the H4 block then, right? This is what we just talked about. Get a displacement above the high, then we can look to be a buyer here, and we're going to be targeting the highs. Do you think it will be a good idea to purely trade based on TPO levels and include VWAP in the mix? For sure, man, for sure. I just add VWAP in the mix because it helps me form a bias easy on the higher time frames. If you're trading purely on TPO, like, I think it's good. But is it good? Look, if we compare the difference, right, between looking at this chart right now or looking at VWAP, I think it is easier on VWAP to see, okay, this is the context for this week, right? We know that it's bullish on the yearly. We know that it's bullish as long as it's trading above quarterly VWAP and previous month VWAP, right? Whilst on the TPO, it's more than enough. Look, we can already see it within these rotations, but it's more lower time frame for me, or on a shorter time frame where I'm able to do an analysis on Bitcoin. How do you define a trading destination? Good point. This is a good example. So when we have a 2-day composite and we open up within the composite, we know that as long as we trade below the value area high, this is resistance. And as long as we trade below or above the value low, this is support. So when we get our trigger to get short, for example, here or here, whatever the trade was, the destination is the opposite extreme. So in this case, it's going to be the value area low for this certain trade, right? This is based on a 2-day composite. So this is not this trade is meant to be for a daily trade or maybe 2-day trade, right? This is not meant to be like, oh, I take a short here and it's going to be a swing short all the way back towards 50K, right? So that's not the play. If we're taking a look, for example, at some of these higher time frame plays where we get, do you remember the 5-week composite? 5 weeks, yeah? If we accept back within a 5-week composite, we can use a similar playbook, because if we accept back within, the destination becomes naked point of control, value area high. Does that mean that there will be no trades in the meantime purely based on previous day value, right? Because this is a weekly time frame. No, there will be plenty of trades, but the higher time frame picture is that this acceptance back within, then that becomes the destination. And how you get in and when we get there, who knows? How do you trade in this environment? How do you join the trend? This mean reversion trades aren't working that well in this kind of environment. Yeah, I mean, that's a good point. It's what I tweeted about that, I think, last week as well, where I was like, on Ethereum, we had this composite. I think, yeah, we had this 13-day composite. Hourly chart, 13-day composite, yeah? 13-day composite value high, and the value area low was somewhere here. So the profiles that you saw me tweeting about was from this range, this entire range right here. And I said, well, one thing that we need to keep in mind is that whenever this accepts above value, we go from a range-bound environment towards a imbalance up market. And at that point, we need to be going with that break from value, right? This was looking extremely sussy, but we can see that we had enough time and space and we weren't able to close below the 13-day composite value high. So this was a pretty clean long. If we take a look at the 30-minute chart, right? Long, stop, and we ride it towards the, maybe you take profits here, or maybe you hold on to that trade, who knows? But this was the displacement that we wanted to see, not this. So how you can get in additional trades is by looking at previous day value. For example, if this is previous day value, we open up within previous day value, we start to trade below, value low becomes support, pullback, short, we target previous day low, and potentially a previously established area of value in the form of a naked point of control. Conversely, if we're trading higher and we accept above the value area high, this becomes support. We look for a pullback to get long towards previous day high, and maybe a naked point of control, poor highs, and so on. So we just hone into the lower time frames when we want to get into a pullback, right? Right now, I would just suggest you just wait. And that's why I tweeted, I'm all in for everybody making money, but when everybody is getting collectively bullish on a weekend with thin liquidity, we've got FOMC next week. I mean, shit, man. I mean, that's just asking for trouble, right? Take a look at this, for example, like these retracements are no joke. 9-day rolling VWAP, by the way, here on Pepe. I know how to pronounce that, but this needs to hold. Nice. But yeah, 112K is still taking into consideration. No, I mean, for me, this basically needs to be capping it. The more time we spend up here, the higher the 90-day will go. And I think a lot of people are waiting for this retest here. And I think we should not do that. Set to what? This is why I said, look at this H4, right? H4, this was the low. And then we have here, same story. H4, that was the low. And I can go on and on and on. You can backtest these things yourself as well. That is why I think this H4 needs to be it. Can we use fixed range volume profile? Yes, 100%. You could do that. Yeah, and you can also just use the TPO profiles within TradingView if you want to have that. Like, there's no real need for CR charts. Not if you're just getting started, I mean. Yeah, stopping as well. Yeah, I mean, I'm gonna see next week with the open. We'll see. This needs to hold, failure to hold, and we're running it back towards the low. Simple as that. So yeah, I think that's a wrap for today. I want to thank everybody for their time. the quality questions. I hope you enjoyed the stream. Again, leave me a like if you've been enjoying the content and made it this far. And I will see you guys next week. I'll make sure to upload a video or two when there's some interesting developments to help you guys keep track of what we've been covering throughout the stream. Last week was a bit difficult for me, where I was not able to generate a video and post it on YouTube, but I will try to pick that up again and see if we get something interesting to keep you guys updated. All right. I'll see you guys tomorrow in the Discord. Take care, man. Peace.